Hello everyone! The purpose of this video is to explain the main concept behind the Whale Sonar. As an investor, one would like to know when an asset is overbought or oversold. When an asset rises too much and too fast, then our gut feeling says that this stock is overheated and a correction is likely. But when is the right time to exit? And when is the top? And how far are we from the peak? To answer these questions, traders have created a number of metrics based on the price and the volume action of the stock. Indicators like RSI, MACD, TRIX, on-balance volume are like compasses to navigate in the landscape of the price action. They are designed to track a stock's momentum, trend, volume, and volatility. However, these compasses are often producing confusing signals. For example, sometimes they are not aligning to each other, other times they are creating too many false positives, and other times they are lagging on the real-time action. One of the reasons why they are giving confusing signals is because there are often interdependencies among them that one needs to take into account. For example, an RSI larger than 80 is considered overbought and less than 20 oversold. However, one should not only look at RSI, but also at a trend, for example using the ADX to check the trend, and similarly the volume, to be sure. Making the Whale Sonar, we have tried to avoid this univariate approach, and we considered all indicators, the way they are correlated to each other, and the way they are distributed in their domains. The next question is, what types of data is more appropriate to look at? Is it technical indicators like the RSI, MACD, TRIX, etc.? Is it on-chain data like the number of wallets and active addresses, MVRV, SOPR, etc.? Or macroeconomic data like the 10-year treasury rate, the S&P 500, or the inflation index? Which of these data carry the information about the status of the crypto world? To answer this question, let's make a small comparison. When we apply the Whale Sonar methodology into the price action of Bitcoin using the technical indicators like the RSI and MACD, we obtain this graph. The blue line here is the Whale Sonar. The red line is the Bitcoin. The units are on the right axis on a log scale. A 0 on the Whale Sonar means we are away from the top, 100 means we are near the top. And the graph shows several years of history. What we see is that there are a number of ups and downs on the Whale Sonar, but overall the model peaks on December the 16th, 2017, which was the end of the bull run. So it can tell us that some outlier conditions were taking place around that date that makes that date different from all the rest. However, this signal was only given to us just on time. If we look closely, it is only 10 to 15 days before the end. An intuition here says that bubbles don't form 10 to 15 days before they burst. They start forming for much longer. And also there is an unsettling amount of fluctuations that are covering the alarm flag. So something is not quite satisfying. On the other hand, if we apply the model into the on-chain data, the picture has improved. The route to the top of the end of the bull run starts happening already from the mid-2017. The fluctuations are smaller and the main drift is more clear. This makes a bit more sense because we expect bubbles are slowly building over time. What do we see in this figure? First of all, the Whale Sonar aligns with the market sentiment. We see that this metric is arriving at its peak at the previous two ends of the bull run. And periods where the Bitcoin is bottoming out correlate to periods where the metric moves towards zero. Then we see similarities between the previous bull run ends. Based on some other additional work we have done, we can say that the structure of the on-chain data towards the previous two ends of the bull run were similar. This builds some confidence that the route towards the end is not a random one. And this is also confirmed by this figure, where the Whale Sonar is peaking almost equally high at the two dates. How certain is all that? Well, it depends on the particular on-chain data we look at and the model's assumptions. And in order to quantify this uncertainty, we provide the confidence interval around the metric. This measures the Whale Sonar's certainty and therefore the risk. It's interesting that towards the end of 2017, the confidence range crosses the dotted line, which is the P97, 2 times before the collapse. This probably makes sense because those Bitcoin peaks were already parabolic. However, at the collapse, there is no uncertainty. The gray area, the confidence interval, is minimal and all approaches agree. Towards the mid of 2021, we also see that parts of the confidence band cross the 97% percentile. That aligns with a common sentiment at that time, whether the bull run was already hyperextended. A very similar concept is the dip sonar. But this time we are interested to know where are the dips instead of the peaks. So in a way, this is complementary to the Whale Sonar. Why do we need a second sonar? Well, imagine you're traveling from Berlin and you want to go to Brussels. The first sonar tells us how far away we are from the start, Berlin. And it could be that it says that we are really far. But it doesn't mean necessarily that we are approaching Brussels. We could be going towards Moscow. Therefore, we need the second sonar to tell us how far we are from the dips. Because in between the dips and the peaks, there is sideways actions. But the dips don't happen for one unique reason. They can happen for different reasons. Some dips are due to inflation, some are due to the macroeconomic environment, some are due to some statements and twitters issued by central banks or famous investors, and some are due to simple profit taking. The fact that there can be different reasons means that we cannot group them all together. The dip sonar looks at the important dips in the history of Bitcoin and tracks the similarities of the current conditions of the blockchain to each of these past dips. It gives us then a slightly more complete picture of where we are standing today. But how should we read the dip sonar? The most basic result is the sonar related to a particular dip. Let's take as an example the dip of March 2020 as a reference. With regards to this reference date, we have a dip sonar which tells us how similar are today's conditions to those of that dip. Note that the units of the dip sonar go from 0 to 100, with 0 meaning highly similar and 100 meaning highly different. These units are opposite from what they were on the Whale Sonar. On the Whale Sonar, 100 meant highly similar, while on the dip sonar, highly similar is 0. And the reason for this is to allow us to have a better visual confirmation of the correlation with the Bitcoin price action. We want to see when the sonars rise together with Bitcoin and when they drop together. The green line indicates where was the reference dip on the timeline, and the red dot at the end indicates the current value of the sonar, or how similar we are today with regards to that dip. We repeat this process for the 20 most important dips in the history, and then we have 20 similar pictures. Here we display 3 of them as an example. The first one for December 2014, the second for the dip of August 2016, and the third for the dip of March 2020. On every graph, the green line indicates the reference past dip, and the blue line is the dip sonar metric. As we roll across the various charts, we see the green line moving from dip to dip, and the chart changes according to how the conditions on the timeline are related to that dip. This might be a lot of information, so let's try to summarize. For each of the reference past dip dates, we display here the value of the sonar as of 30 days ago, 10 days ago, and the current value. This helps understand in one shot the status of the current conditions and their recent dynamics. In this example that we highlight, we see how we are approaching to the conditions of March 2020. The deep sonar decreases towards zero from 30 days ago to 10 days ago to now. But what can the whale sonar reveal about the market sentiment? To get an idea, we have created the following figure. On the horizontal axis is the value of the whale sonar from 0 to 100. 0 means away from the all-time top, 100 means we are at the all-time top. On the vertical axis is the percent change of Bitcoin price 60 days after the whale sonar had arrived at a certain value. To give an example, when the whale sonar is around the value of 30, then historically the subsequent price change in Bitcoin has been on average about 10%. The blue dots are all the historical data in the period 2015-2021. The red dots are simply averages across the whale sonar buckets, and they are there just to help detect the trend across all the data. The three black lines are three phases, you could say three FOMO phases. The first one, from about 0 to about whale sonar value, is about 20. It's where the price action is moderate to about 10% on average upside. Here you find the bulk of the historical data. The green vertical line indicates the median level across all history. The second phase is from about the value of 20 to 45, where the price action is slightly steeper and longer, with an average upside of about 20 to 25%. And notice that after this level there is a period of decline. Then, while not all the whale sonar levels will ever be visited, however, if this index manages to arrive at a further level of about 50, then history says that the price action that followed was a much steeper upside of about 30 to 40%. And you could say that's the third FOMO phase. The three phases appear to have an increasing steepness, and this could make sense from a behavioral point of view, suggesting that we go through levels of increased adoption. Beyond that level, if it ever gets there, there is a declining trend and the upside is capped. And around levels of 75 to 80, the average PNL is negative. Another interesting aspect is how the blue dots start breaking apart at around level 30. While up to that level, the upside and downside were roughly normally distributed around their average, at around 30, two separate clusters appeared. The price action in the next 60 days was either very high at levels of about an upside of 60% on average, or very low at levels of about minus 20%. So on average, that's about, in this bucket, 15 to 20%, but the standard deviation becomes very large. Notice, for example, that the whale sonar levels of 35, at that level, the red dot, the average, is nowhere near any actual historical value. And the same zigzag pattern appears again around level 60. And now let's ask ourselves, how well does the whale sonar agree to the Bitcoin price action? To answer this question, we considered the relation between the peaks of whale sonar to those of Bitcoin. Let's first define a horizon. This is the number of days before and after a certain point for which we require the value of Bitcoin to be a local maximum. So a peak with 60-day horizon would mean that this peak was a local maximum for 60 days before and 60 days after that point. Now, for all the peaks associated to a particular horizon, we computed the distance in time of the peaks of Bitcoin to those of Whale Sonar. And then here are the following possibilities. First, we have the true positives. In this case, a Whale Sonar peak and a Bitcoin peak are the same. Then we have the false positives. In this case, Bitcoin had a peak, but the Whale Sonar didn't. Here, the Whale Sonar missed the true peak. And finally, we have the false negatives. The Whale Sonar had a peak, but Bitcoin didn't. In other words, the Whale Sonar peaked wrongly. So the false positives and the false negatives represent the occasions where the Whale Sonar made a mistake, and we are interested to know how many mistakes it does. In this figure, we show an example of a backtesting methodology for a horizon of 60 days. The green dots correspond to the true positives, while the red and orange correspond to the false positives and the false negatives. In this case, we have 11 true positives, meaning the peaks aligned 11 times out of a total of 16 peaks on the Bitcoin timeline. In general, we see that the peaks align quite well. Among the true positives, the average time difference between the Whale Sonar and Bitcoin peaks was 3.2 days. In this figure, we show the true positives, false positives, and false negatives, how they depend on the choice of the horizon. We see that the true positives are always by far the largest group. The table on the right shows the accuracy in terms of recall and precision. The last column indicates the average difference in days among the peaks of the true positives. We see that this number is in general quite small. Let's now address the question of how one can use the sonar for a particular stock. While the Whale Sonar methodology can be applied to track similarities of past ups and downs, however, stocks don't have on-chain data, so here the source of data is the close price and high, low, and volume. Although we have seen that the reality of the price action is not always captured by these indicators, nevertheless, it still gives us a hint that might be better than plain eyeballing of the price chart. So here we are taking a large number of technical indicators into account, and we process them collectively to tell us how far we are from the top or the bottom. An example of applying the Whale Sonar methodology to a particular stock is in the figure here. Here we show Marathon Digital, and there are two parts in this figure. The top is the dip sonar and the bottom is the peak sonar. The red lines correspond to the price action of the stock, and the units are on the right axis. The sonars are the shaded areas. Although the bands look like Bollinger Bands, in reality they're a bit more complex as they take into account various indicators of trend, momentum, volume, and volatility together. So let's first look at the top chart, the dip sonar. 100 here means that a dip is highly likely, and 0 means that a dip is highly unlikely. And similarly for the other chart of the peak sonar. We see that the confidence band on the dip sonar rises to high values when Mara was bottoming out, and it goes towards 0 when Mara was going towards a peak. On the bottom graph, on the peak sonar, we see the complementary picture. Periods when Mara was topping, the sonar was also moving towards 100. And we also have periods where neither a peak nor a bottom are detected, and in this case the interpretation is sideways action. So in this case, the sonar can be used to detect the price action. So with all this, we hope that you will find this work useful and that it can help you manage your trading risk and appreciate the course of the halving cycle. Thank you very much.